Good morning. It's 11:05 a.m. Do you know where your home equity is? Welcome to the Velocity of Money. Here now to answer your questions about real estate, capital, equity, funding, and finance, your host of the Velocity of Money, Michael J. Barnes.
People find themselves in a very difficult situation in considering these options, whether it's a loan modification, a short sale, or whatever they need to do to relieve themselves of the burden of this particular mortgage that, for whatever reason, they're no longer able to maintain. They're not necessarily considering the fact that there's a tax ramification associated with taking a specific course of action, in this example, the short sale option.
Right. There's actually two pieces of tax component here. You've got the forgiveness of debt income that we talked about, and then you still have the fact that you've sold your house, and you've got to see if there's a gain on that.
Over and above the cost basis of the home.
Right.
Well, and then in addition to this, we talked about the 1099-C. Did you say a moment ago that the lender sends a copy of the 1099-C to the IRS?
Absolutely.
Now, okay, so I'm the guy a few minutes ago that bailed on my $400,000 loan, sold it for $300,000. Well, what if? How are they going to get in touch with me? How are they going to get me the 1099-C? How am I going to get a copy of this from my lender if I've moved off and didn't give them my forwarding information?
Well, that could be a problem. They're going to send it to the last address they have on record.
And it's my problem, right, as the homeowner, it's my problem to rectify that.
Right. And IRS will get a copy, so they'll look for it on your return. If you forget to put it on there, you're going to get a friendly notice from the IRS.
How friendly is that notice?
Well, I think in the case of, and that the way that I posed that question very well may not have been fair. I mean, if somebody's going to do a short sale, that's a fairly, generally is a fairly civil transaction. Whereas when I say civil, I mean friendly. People are, even though they're having to go through the short sale, it's horrible for them and their families, but it beats the alternative foreclosure. But I think the real problem is when the house actually ends up in foreclosure, and the guy just walks away and moves off to El Centro, California, and and doesn't give a forwarding address because he, was embarrassed or whatever. He's the guy that's really going to get hurt.
Absolutely.
So in the event that somebody takes that course of action, and I know that Velocity Financial and Michael Barnes, you don't necessarily, you're not an advocate for the short sale approach.
Not normally, no.
Yeah, it's not necessarily the best course of action, but we've been talking about the loan modification, and it would help me to, when I talk to clients or people that call me from the radio broadcast that ask questions about the loan modification process as part of a financial strategy. Help me with some of the tax implications of what that represents. Is there something that I need to be looking out for? Let's say, I've got a loan, I decide that modification is a better approach for me in my circumstances, and I go down that path. Am I going to be faced with a 1099 or some form of tax bill at the end of a modification?
Yeah, the first of those two tax implications will apply, which would be the debt forgiveness part, because go ahead.
Oh, yeah, I didn't mean to interrupt you, Mike. I'm just saying that there are several different types of loan modifications. I believe are you asking about a loan modification where they actually do forgive some of the debt, correct?
Yeah,
Okay.
That's an excellent point. I know that there's been a lot of discussion regarding some of the TARP funds and some of the bailout from the federal government regarding these banks to qualify for some of these funds. They have to do principal reductions for their mortgages. But let's say there's not a principal reduction involved, so that from that aspect, there's not a taxable event that would take place if I'm not reducing my principal. I'm simply getting an adjustment in term or rate.
Right, you're correct. The only time the taxes would come into play was when the principal gets reduced, because that's forgiveness of debt.
And then to take that a step further, whatever mortgage interest I'm able to deduct on my tax return may be impacted if it's a lower percentage or whatever the case is.
That's a good point.
Right, because you'll be paying less interest.
Sure.
But there'll be no surprise like a 1099 coming your way if it's just an interest modification.
Okay.
Well, and that's one of the things is I get calls all the time from people. I try to make it very clear on the radio that we're here to do whatever it is that we can, whatever it takes, and then some for you, the consumer, the homeowner that's trying to save your home. But the people that are calling me, this guy I'm talking about that owes $400, house is only worth $300. The reality of it is the lender that he has more than likely is not going to forgive that $100,000. However, the lender is very willing to lower the interest rate, if it makes sense, lower it significantly enough so your payment would be the same if they did lower the principal balance, because it's not a permanent loss for the bank. So if somebody out there is telling you they're going to have your mortgage reduced by tens of thousands or even hundreds of thousands of dollars, it's not going to happen. Not now, and I doubt anytime soon. You're listening to The Velocity of Money. For more information, 480-835-6248 or 480-VELOCITY, and we'll be right back.